This all started where there was a group of merchants meeting under a physical tree, which was just a spot where it was comfortable for them to meet, to actually do business.
The internet was, of course, the breakthrough.
Yeah.
It was so much easier. It became so much easier to just buy stocks. You don't have to go to a bank.
Hi everyone, here is Francesco and Marens from the Crypto Valley in Switzerland. So the discussion of today is around democratization of finance. This is the first video of a three-series video around the democratization of financial markets. Specifically, in this video, we'll discuss about the democratization of the stock market and how it has evolved from retail investors over time. To get started, we will start with a short clip, as always, where we will see the World Economic Forum discussing about financial inclusion for retail investors.
Historically, most retail investors invest in largely traded equities. Fixed income hasn't received the same level of attention, and until recently, private markets have been inaccessible to the average retail investor. Giving that retail investor a broad access with transparency, a clear understanding of the economics and risk, I think it really is the mandate for our stakeholder group.
Okay, Francesco, so from this video we saw that, that retail investors were excluded from private equity in the past. But what a lot of people don't know is in the past also people could not invest in public stock exchange. So it was very restricted,
Right.
Just an elite of group of investors could invest. And yeah, maybe it would be interesting to hear from you, like how has public stock exchange investing evolved over time?
So maybe it's interesting for the audience to get started with a little bit of history around it. And the first public market, the first stock exchange actually, it was in Amsterdam. So in 1611. So there was the first stock exchange where there was actually the first listed company, which was the Dutch East Indian Company. And actually this was the first company where people were actually able to buy and sell the securities. And from these specific cases, also in all the other countries, they developed similar concept of exchanges where people could buy and trade securities. This led to a bubble, the South Sea bubble, where actually it's actually quite similar to what happened in the ICO craze, where people were just seeing some company who were traded, and people floated money into this company without making any assessment whether these were sound companies. And history is fine because it's just repeating itself. We've seen in the ICO craze in 2017 was exactly the same thing. People floating money into things that not everything was very sound.
Okay, interesting. After the South Sea bubble, like how developed it further, how it got to like what it is today?
In the late 18th century, in America, there was the first actually some sort of exchange developed as well. So it actually all started where there was a group of merchants meeting under a physical tree, which was just a spot where it was comfortable for them to meet, to actually do business, decide how to buy stocks, bonds. But at some point, this group became quite big. And so they had to find another place. They went to a cafe next to it. And then they decided, okay, but we need to put down some rules on how to settle these trades. And that's where actually the Buttonwood Tree Agreement came into formation, which is the preemption for what is now known as the New York Stock Exchange, which is still there. So it's actually something that was born around more than 200 years ago. And then this developed other exchanges across Americas, like the Philadelphia Stock Exchange was actually the first official established stock exchange at the end of the 18th century. So this leads us to the Roaring 20s, where people actually had more access to the stock exchange and were able to invest, and that's actually what at some point people taking too much leverage led to the crisis that we all know in the 1920s. But still, the access was very limited to retail investors. This was only for a restricted pool of really wealthy individuals, institutional investors.
The beginning of 1900, like 1% of Americans actually invested in stock exchange, and the most important reason was that the fees were very high.
Right.
I mean, you could not just take your mobile phone and invest like on Robinhood or something like that.
Right.
These were brokers who went to the stock exchange and they asked for a commission, of course.
Right.
But then it further developed, like especially like in the 1950s, people could invest portion of the retirement so
Exactly.
their individual retirement account, they could invest in stock exchange, and that really boosted stock exchange investments a lot. And in the 1960s, 70s, also the commissions were quite high, so a lot of people could not invest because it was too expensive.
Right.
But then the commission went down significantly in the 1970s, and also the Nasdaq was established.
Yeah,
that was a big thing.
It was the first electronic stock exchange.
Exactly, and a lot of people then choose to invest in stock exchange. And then further down the road, like in 1980s, 1990s, ETFs were invented in the 1990s,
Right.
which further drove down costs a lot, and people invested more and more.
And people could easily diversify as well, because before it's like you had to pick the stocks, and which was quite risky. While with an ETF, it was easy to spread the risk among a big bundle of stocks.
Yes.
Which, I mean, there were the mutual funds before, but still it was a bit more expensive than an ETF. And on top of this, ETF can be traded at any time, like any stocks. While you cannot trade a mutual fund whenever you want. I mean, still you have to wait for the end of the day.
I mean, this was like product side. Then on technology side, like the internet was, of course, I mean, the breakthrough.
Yeah.
It was so much easier. It became so much easier to just buy stocks. You don't have to go to a bank. You just open your mobile phone.
Today
3
it's like,
clicks and you have
it's
invested.
completely democratized and completely accessible to everyone. And like looking back, like just 50 years ago in the 70s, I asked my dad interesting facts about how was it common for people to own stocks and things like this. He told me, well, it was of course completely not common. First, there were no funds to invest. And if you wanted to buy any stocks, you needed to go to the banks, and it was charging you high fees to actually purchase on your behalf the stocks. And so no one was doing it. My dad also told me, it's like just honestly, with the internet, it gets really easy for people to participate in the stock market. So now we just looked at the democratization of the stock market. So basically we've seen how it was really inaccessible at the beginning, but it got really accessible now for everyone, for every retail investor. Well, the video that we looked at the beginning was actually mentioning that the private markets are quite still inaccessible for the retail investor. And I will agree that at some degrees they are still inaccessible, and they still need to be completely democratized. But maybe it will be also interesting to take a look at from where they started and where we are today into this process.
Yeah, so maybe a good example is startup investment, I would say, as one portion, a significant portion of the private equity market. And it was a similar story, I would say, because at the beginning, just very wealthy people like the Rockefellers, the Vanderbilts, and so on, they invested in startups at the beginning. So this was in the early 20th century. And then there was one guy who basically invented a venture capital industry. So his name is George Doriot, and he established a company which is called ARDC. And what did it? He was a professor at Harvard. And what did he do? So they invested in one company. Invested 70,000, turned out to be 300 million. A little bit later. So this was really the proof that venture capital works, the industry works, but of course was not democratized at all.
Of course.
But later on, some students of him, also Arthur Rock, very famous guy in the venture capital industry, then institutionalized it more to develop like venture capital funds. Venture capital funds invest in a portfolio of startups on behalf of wealthy individuals, of course. But even then, back then, this was in the 1970s, this was not very well established, also because institutional investors could not really invest there. There were some regulatory constraints which were then levied, so that also pension funds could invest in startups.
Right.
And this was the breakthrough, but it was still milestones away where we are today, like how it further developed over time, venture capital industry.
Yes, I think like till actually recently retail investors were completely excluded. It's only in the last decade that retail investors can actually easily access to equity of startup investments. It is only after the Jobs Act that was in 2012 actually was passed, which means was allowing startups to advertise their rounds, their investment rounds on internet to retail investors. There were some limits on how much these companies can raise. At the beginning was 1 million. Now we get bigger to 5 to 7 millions in some, depending on the countries, of course. But this is like the democratization of investment into private companies for retail investors. Now, a retail investor can have access to investments into startups, and also what has developed forward is more some clubs of business angels.
Yes.
So this is also in the last decade has become really big in many countries.
What would you say? Is startup investment now democratized?
I mean,
like on the stock exchange?
Not fully, of course. As we say, private market are now completely democratized. We are not at the level like with the stock exchange or with public markets. There is still something to be done. Actually, I think that what can be done to be improved? Definitely, the technological side is going to play a big role into make it more accessible. But also the educational side is going to play an even more important role, because back in the days, people could not even acquire the knowledge to invest in the stock market, while now with the internet, actually people can easily consume knowledge, but still there is a big portion of the population that doesn't know about it. So on one side there is the technology, on the other we also need the education. But yeah, we are not there as a stock market as of today. I believe blockchain technology and tokenization can play a role into democratize these kinds of investment even further, make it more accessible in terms of liquidity, making investment more liquid, because still today is an illiquid investment.
Okay, interesting. So like venture capital, we saw significant progress there, I would say.
Exactly.
But the other big thing is like private equity.
So in private equity, it's similar to VC at the end of the day. We are still talking, it's a different stage of the development of a company. It's an investment at a different stage of the development of a company. So private equity also at the beginning was only reserved for wealthy individual, institutional investors. To these days, the tickets for investing in private equity are really big. Like normally the deals are in the hundreds and tens of millions. So retail investors really have a hard time getting into this deal, especially because it's a lot of networking connections. Still with the VC is similar actually, but sometimes companies who are raising smaller rounds, seed to Series A, it's feasible for retail investors to bundle enough money to invest. But when we are talking about big investment into private equity, which in the hundreds of millions, then like it's real. The money of retail investors are not that irrelevant, unfortunately. But still, we are making some improvements. There are some companies who we have seen recently who allows you to directly invest in companies, which is Moonfair's.
I mean, Moonfair is a good example, because as of today in private equity, as you said, you need maybe 500k minimum ticket. Otherwise,
normally, yes, exactly.
You cannot access it. And now there is a German company, a German startup doing that, which basically pools investors together so that they can get access to private equity. And in my opinion, I mean, this is long overdue, because in private equity, the market has exploded in recent years. It became huge, and also returns were significant. And retail investors were just shut out of that. Completely. They could not invest in that. And at the moment we are not yet there where we are with VC investments, not at all. But we are slowly getting there. But as of today, also with Moonfair, you need like 50k to invest there. Even so you cannot really say it's democratized.
And still, it's a very liquid investment. I mean, they propose some sort of secondary market, but still, you know that it's a long-term investment, and this is. And we have seen actually by reading what Moonfair said is that 82% of their investor actually they want to sell within 5 years. Most of their investor within 5 years of the retail investor wants some liquidity, so wants to sell their investment, and this is a big problem because we just have to realize that the retail individual doesn't have the same time horizon of an institutional one.
Okay, interesting. So based on this discussion which we had so far, it's my impression it took quite some time. I mean, from the origins of stock exchanges in the Netherlands in 1611 until like people could then in the 1980s, really 1990s even, access these public stock exchanges. This is quite a long time. So what has hindered the democratization of equity?
I think I spoiled it a bit before about this, but definitely what has hindered democratization is the technology. So definitely there was the first, because it only got really democratized and available when the internet was there.
Yeah.
Because I also was I said, like talking to my dad, and his experience when he was in the 70s and 80s, like there was no easy way to get access to the stock market. While nowadays, as we said, everyone can open an account with any bank, with any fintech. So technology,
yes,
and education, of course, those two have been hindering democratization, of course. So technology on one side, which now has been somehow has paved the way of where to go, but the other side is education. Because
generally education or information even.
Yeah, information about it.
I mean, they don't teach this stuff in school, right. So most of the people, they don't understand what a stock is, what a bond is, but it's super important for them. It's important for the future, because they should be empowered to invest in what they believe in products which make sense for them in the long term, so that they can also benefit of like what society is producing and not shut out and only like the rich people can invest, but everyone should be able to invest. So information, the spread of information is a big topic.
Exactly. Of course, and then regulation has made a portion of this hindered a bit the adoption. So the regulation has always tried to protect retail investor from this. So they could not access private equity. They still cannot access hedge fund investments today. So many things they were not capable of investing at the time. Now it's definitely getting better with the Jobs Act. They can invest much more easily in startups. So I would say these three things: technology, education, regulation, have been hindering democratization.
Okay, now with the internet and so on, we overcame some of these challenges effectively. So what are now the benefits that people can get access to these products?
Mm-hmm. The financial products are not reserved for a small pool of wealthy individuals, but can be accessible by pretty much anyone. So everyone can participate in the gains of the financial system, which was historically only reserved to a handful amount of people. While nowadays, other people can enjoy the benefits of participating in the financial markets and, of course, earn some portion out of it.
Yeah, also, I mean, financial markets in the past were very successful in general, but not a lot of people benefited from it.
Exactly.
And if you make it more accessible, then also more people benefit from everything which came into existence in the last 20, 30 years, and which will be in the future.
Yeah, like we know exactly in the last, after the crisis of 2009, like private markets have exploded. And of course, the people who captured all this wealth, wealth generation have been venture capital, private equity companies. But of course, retail individuals were excluded for this. There was no way for them to access it.
Talking about the future, how will the future look like? What can we expect in the next years to happen?
So for me, looking at the future for democratization of finance is definitely accessibility for retail investors. So what I expect in the future, the same level playing field for everyone. So everyone will have access to the same opportunities, and definitely technology will play a big role into this. There will not be much differentiation to what some people, some wealthy individuals have access and what others have not. And one big component which cannot forget is that yes, the technology is helping us there, but education is going to be even more important. Thanks a lot for watching this video. Hope you enjoyed the discussion around the democratization of finance. So as we said, this is the first video of a mini series of 3 videos that we will do around the democratization of finance. Hope you enjoyed. Put a like if you like it, and see you next week.